Good morning, everyone, and thank you to all you amazing people for joining us on time. This session is going to be an absolute amazing one. I assure you that. I am Sydney Mascarenas, your host for this launch session, and I'm as excited as you are to unveil what's about to come next. At Yes Securities, ladies and gentlemen, it is a constant endeavor to upscale and empower our customers in their journey to create wealth. And today we have a significant transformation update for you, wherein from this very moment onwards, Wealthbox platform from being just a research-based platform has transitioned into a full-fledged platform for research analysts and RIAs. And for the first time ever, we are joining our hands with an exceptional partner called Renaissance Invest. Renaissance Invest is a firm that was established in 2016 and has spread across six Indian cities as of today with over 50,000 dynamic professionals. At the head of in charge, at the head of the in charge is Mr. Pankaj Murarka, who has experience of over 25 years across industry giants like Motilal Oswal, Merrill Lynch, Rare Enterprises, UTI AMC, and most notably Axis AMC, wherein he managed assets worth over $5 billion. Going forward, we'll have our three special guests who are here with us and let us know more about what the product is all about and what and how can we go about selling those products. To my left, we have Mr. Anshul Azare, MD and CEO, Yes Securities, Mr. Pankaj Murarka, CIO and founder, Renaissance Investment Advisors, and Head of Mr. Dheeraj Padyat, Head of Product and Digital Initiative. So from here on, over to you, gentlemen. Anshul sir.
Yeah, very warm welcome, Pankaj.
Thank you.
And you've been an institution in this industry in your own capacity. So to begin with, everybody is thinking about what's going to happen in the markets in the coming times and what lies in the markets in the very near future in the backdrop of how the rupee is behaving, how the movement in commodities is also behaving. Typically, when you see the volatility in the gold as well as silver prices, which is happening, dollar rupee movement, and last but not least, the situation which we have right now across the line of control out there. So, how you think we should be navigating, or any investor should be navigating the markets in these point of times?
Sure. Thanks a lot, first of all, Anshul, for inviting me, and I'm for Dheeraj I'm really very excited about this partnership that we have with you all, and I think together we can really take our investment products to clients for great outcomes. You're absolutely right, Anshul. From my experience that I have been into this markets now for about 28 years, this is one of the most uncertain time that we are going through, and I date this back to my experience having lived through Asian financial crisis, the technology meltdown in 2001, the global financial crisis, and all of that. Because the fact is that the world itself is in the midst of a very big economic transition where China is clearly rising and challenging, and everything else is a consequence of that in terms of whatever we're seeing on geopolitically. And now obviously we have this issue on our borders that's going on for the last few days. I think one, at a very high level, the point I want to make is in midst of all of the chaos and uncertainty that the world is witnessing, probably India is the only island of calm and strength in the world. And this is now getting acknowledged even by global investors, because given the economic uncertainty which tariffs have created, and we are in a new world order where tariffs are here to stay, the new world order, meaning the rate of tariffs can differ, but all I'm trying to say is this tariff-driven world order or economic trade is here for the next 10 years to my mind, at least for the next 8 or 10 years. In that context, probably India clearly stands out because one, as an economy, we are the one which is the least impacted because of tariffs coming out of US. And secondly, also because probably we will be one of the very few countries which will be a beneficiary of that. Because today all of us know that 90% of global manufacturing supply chains are concentrated in China in some form or other, directly or indirectly. And clearly, global supply chains want to de-risk themselves or move away from China or reduce the dependence on China. And the only viable alternate that exists in the world is India for all of these global supply chains. We've recently seen Apple has announced that all the iPhones that are sold in US, they will shift the production to India by 2026.
Right.
Prior to this tariff order, that was supposed to happen by 2030. So
Absolutely.
Apple has preponed their plans by 4 years. Foxconn.
And that's a huge thing.
That's a huge thing.
4 years.
Yeah.
And that kind of a contract coming to
Exactly. Foxconn, which is the largest vendor for Apple, one Foxconn has 1 million employees in China. And the Foxconn CEO, global CEO, is on record saying that he wants to create another China in India. So Foxconn currently has about 160,000 employees in India. And they're committed to building another China-like manufacturing facility in India,
setup.
which effectively means Foxconn will have 1 million employees in India in probably in 5 years' time.
So you mean to say that what China probably would have lost because of maybe a non-democratic activity or maybe some other issues which are going on, the real estate crisis which is going on. So India would be one of the biggest beneficiaries. And what would be the critical reasons for everybody choosing India specifically for that activity?
Yeah, absolutely. So I think it's a confluence of factors that the world is aligned. There's a time in history, if you see the growth and evolution of every country, there was a point of time where stars have aligned for that country to have an exponential growth or an outlier growth. Japan had its own period for about 18 years in the 70s and 80s before they peaked in early 90s. Europe had it when they had the first industrial revolution and so on and so forth. US has had its own time. China had it for the last 25 years. And I think things have aligned for India in all respects. So obviously, when these supply chains, let's say from a manufacturing perspective, when they move out of China, there's no other alternative that they have because no other country has, ability to supply resources, be it manpower or infrastructure, at that scale that India can provide.
Support that kind of demand.
That kind of resources. So meaning, for example, let's say going back to the same example, a Foxconn cannot hire 1 million people in any other country in the world because that kind of employee base is not available.
Right.
A lot of these neighboring countries, I say this, India is not a country, we are a continent. Bangladesh is equal to Maharashtra. A lot of these are neighboring countries are equivalent of a state in India.
Right.
So, given our size and scale in terms of this thing, and obviously we have resources which as a country we underutilized, including a human resource potential.
Right.
So I think all of that comes into play. What really also stands out in these times of uncertain environment is the very strong resilience of India's domestic economy. So that
also plays a big role out there.
Very big role because global companies and countries understand that despite global chaos, where the world is in chaos, India is one which is extremely resilient. So that increases their confidence because no one wants to deal with, let's accept it, no one wants to deal with weak partners. No one wants to do business with weak countries or fragile countries or vulnerable countries. If you really want to grow in life, you have to emerge as a strong, stable economy or an ecosystem. Only then the world wants to deal with you.
So with all that factors, we feel that India is one of the best at this point of time to fill that gap.
Absolutely, undoubtedly. In fact, my conversation when we talked to a lot of large, global, large institutional investors. One thing which is now clearly getting acknowledged in the world when you talk to large institutional investors in US and Europe is that when you take when you look at the world from, let's say, top of Eiffel Tower, you look at the world, the only secular growth story in the world is India. Everything else is cyclical. We are the only secular growth story that exists in the world for the next 15-20 years.
So Pankaj, now in the backdrop of this at this point of time and then the philosophy of SQ Garb which you follow, right? So how, just throw some light on that, what is that philosophy and how it has helped and how you think it's going to help the decisions which you take at the fund level, which will help the customers to create more wealth, what they are looking for.
Sure, absolutely. So one thing I just want to say at the outside, I believe in my 27 years of experience, India is a paradise for growth investors. Growth investing in India in the last 25-30 years when you invest into stock markets has been extremely, extremely rewarding. Meaning, and as a growth investor, you're spoiled for choices in India. At any point of time, I'm saying in my career, even when I managed large pool of money at Merrill Lynch or Axis, I always had more ideas, investable ideas at my disposal than the money I had. So, because the point is, the pool or universe of high growth companies in India is always ever expanding because there's so much of entrepreneurship, there's so much of creativity, and so on and so forth. That these are great companies. A lot of Indian companies we've seen in the last 25, 30 years, while they're Indian origin, but they become global. When you talk about India's IT sector, let's say when you talk about Infosys or TCS, these are companies out of Indian origin, but they clearly dominate IT services in the world. Meaning, for a reference or a context, one out of every third software engineer in the world is an Indian origin guy. Whether he's working for an Indian company or TCS or Infosys or he's working for a Google. So we are the manufacturing factory to the world for software engineers. The world is going to get more and more technology dependent and driven by technology with evolution of AI. Software or technology is at the heart of the world. Your small malfunction in a small, in a large company can bring the world down.
Absolutely. These days, I mean, that's something which
you
is
need
very, very,
software engineers.
The dependency is huge, yeah.
To produce one software engineer takes 27, 28 years. Because he has to go through an entire education process you cannot produce a software. It's not a factory production. You cannot generate engineers out of thin air. Yeah. So India these are Indian origin companies, but we've created global companies of India. Because these companies run very mission critical business operations for amongst the top 50, top 100, top 200 companies in the world. They are managed by these companies. And these are large part of these are managed remotely from India.
So how does your philosophy SQ works?
Yeah. So coming back to that, I think one thing which I firmly believed is what really works in India from a wealth creation perspective is growth investing. It's extremely, extremely rewarding being a growth investor in India because then you just, with staying invested with these companies, you keep compounding your wealth at a pretty high rate over a long period of time. Right. Having said that, what I also realized early part of my career is while growth is a central pillar of creating wealth, but what is equally important is to invest in high quality businesses because stock markets are a great leveler and they do not give tangible long-term enduring value to businesses which are not good quality. So it also means that you want to distinguish between secular and structural growth and I would say cyclical growth, which is only for a period of time. So stock market tends to value growth, businesses which can deliver enduring growth over a long period of time. And more importantly, because the world, I believe the kind of world we live in, we'll have a big economic or geopolitical crisis once in every decade, meaning to me it's a given. Then when we're investing a significant part of our wealth in stock markets and we want to use it as a tool of wealth creation, it's very important we want bulletproof businesses. So the sustainability becomes very important. For example, in our framework, the one question we ask ourselves, our investment team asks when we look at any company, is tomorrow there will be a crisis which will be multi-time bigger than the last crisis that we faced. And will this company or business survive that crisis or not? And if the answer is no, then ideally we don't want to invest into that business, irrespective of the fact that durability or sustainability becomes very important for us. So this in effect reflects the 4 pillars of our investment framework in terms of wanting to buy sustainable businesses, high quality businesses and high growth businesses. And once you get these 3 things in place, you want to buy those businesses at a fair price or reasonable price. True. So which is what, I've been practicing this for now almost 22 years. And it's worked very beautifully for me. So, I don't see any, I think, probably that's the best path for wealth creation. Unfortunately, investing is very simple. If you can just, follow a simple process and philosophy, and which is what we try to practice.
So you're talking that growth is the prime
driver of
the value creation, and then followed by the resilience and sustainability of the businesses which can happen. Yeah. And then the last but not the least, that is it available at a fair value at this point of time? So you'll wait for that value to come. And then, so that gives the best growth opportunity for the investor's money.
Yeah, absolutely.
Fantastic. I think, guys, that's the philosophy which comes from none other than Pankaj. So I think that would be driven in the characteristics of the 2 products which we'll be talking about. So over to Dheeraj.
Thanks, Pankaj. I think it's an absolute pleasure to have you on this forum. I think you come with a great pedigree. I think market knows about it, investors know about it, and it's a real honor to have you on our platform. And I think everybody will definitely benefit from the vast knowledge, the expertise, and the way the entire investments can be managed. I think in this context, a couple of questions that I have, and the thesis behind what is the ideas or strategies that we want to deploy, or what kind of baskets we want to end up looking at it. Now, to set a context, year to date, I think the indices have been highly subdued. It's been extremely volatile. At the same time, there are outperformers that exist. And the outperformance is largely, as you mentioned, is in quality of the stocks that you hold. So if you look year to date, Nifty is at about 3% or 4% up. Mid cap is down about 4%, and small cap is down about 13%. Now, as this as a context, you have two well-defined strategy which says prime blue chip and one momentum max. So how does your strategy align with what is currently in the market? And what is the visibility that you have in terms of the outlook for the strategies that you have? And how does your past performance correlate to what we can expect as an expectation of returns in the portfolio?
Sure, Dheeraj. Pleasure is equally mine, Dheeraj. It's been indeed a privilege, being part of this and working with all of you all and starting this journey. So great question. I think the idea is very simple. As investors, while we are looking to generate high returns, two things are important. One, our objective is to we want sustainable high returns for our investors, because investors expect that. They don't want one of those returns. And we want to deliver those returns with what I would say is low risk. In stock markets, high risk does not translate into high returns.
Correct.
High risk can translate into high losses. So this is the fundamental principle which derives, portfolio construction or product creation at our end. The product that we are going ahead and launching, the blue chip or the prime blue chip as we call it, meaning the idea with that is very simple. If you look at the markets on an aggregate basis, there are about, on the NSE, there are about 2,300 listed companies.
Correct.
An ideal investor, I believe, should have a focused portfolio of about 25-30 companies. You don't need to own more than that, So the idea with this is very simple, that which are the best 25 stocks among the listed universe that one would like to own at that particular point of time.
Correct.
When we select those 25 or 30 stocks out of the 2,300 stocks, I think investors will appreciate the fact that we are buying 1% of the listed universe.
Correct.
So which effectively means we are rejecting or leaving aside 99% of the invested companies. I can tell you with confidence, there are more than, there are at least 15% or 20% of companies in the listed universe in India, which are very high quality, which are run by very competent and capable management. And these companies are amongst the most well-run companies, even from a global standards. Now, within those also, you're trying to select the best of the best. So, which is what I call, it's like selecting diamonds, So, idea is when you're owning blue chip, your companies that you select, I say that ideally it's like buying diamonds in the stock market, because you're so selective. The bar for those companies to get into our portfolio is extremely, extremely high. And eventually what you get as an outcome is, if an investor wants to just own one product or one portfolio which gives him exposure at any point of time to the best companies which are listed out there in India, with the best economic prospects, with the lowest risk and healthy, sustainable returns, I think that's the blue chip for you.
Okay.
So obviously there's a lot of effort that goes into creating that outcome, and which is why I also call it, it's meaning internally I tell my team that it's a SIP portfolio. It's a sleep in peace portfolio. Meaning investors can just sleep in peace with that portfolio, because meaning at any point of time, that's the best portfolio at the intersection of growth and risk. You cannot get those kind of growth at that lowest point of risk. The point in investing is, how do you get the highest growth or returns with lowest risk?
Correct.
That's the key to it, that you don't want to take high risk and yet you want to make high returns.
Correct.
And which is what exactly blue chip is. At the same time, what we've tried to do with the momentum portfolio is while we invest into, as investors, we tend to be slightly more longer term in our approach. So in blue chip, when we invest into stocks, we take a 3 to 5 year view on stocks. But I understand there are investors who want to be slightly more active in the markets. Yeah, they want to be slightly more indulgent. And yes, the volatility in markets have increased, and that creates its own set of opportunities for investors who are willing to be slightly more indulgent. So idea is, the momentum is to find companies which fits into all our framework and which are likely to show very healthy or strong earnings momentum over the next 6 to 8 quarters. And it's logical that companies with strong earnings momentum will eventually have a strong price momentum. Yeah, so overlay a factor of market behavior with our fundamental framework and create a portfolio of companies which will be slightly more, with the holding period of a typical stock and a momentum is about 1.5 to 2 years, unlike blue chip where the holding period is 3 to 5 years, and chase or invest into companies which fit into all our frameworks of quality growth, and yet which are going to deliver the highest earnings momentum over the next 1 to 2 years kind of thing. So it's a slightly more active portfolio and a slightly more indulgent portfolio in that sense, but yet keeping our risk and quality filters very tight.
Okay, great. I think there's a huge request or queries coming from everybody in terms of what is the outlook for the market. I think past is always given, future is something that nobody knows, and as equity, I think it's unlimited gains, you can have unlimited losses also. But from a visibility or from your point of view, where do you think Indian equity markets lie for the next 24 and 36 months, given that equity is always a long-term investment? Second is, in the portfolio construct, which is the sectors that you feel higher allocation can generate the alpha? And if you could throw some light on your past performances in terms of how much alpha you've been able to generate as compared to indices. I think this will help everybody out.
Yeah. So maybe I can start with the last one and then come back to the outlook of the market. So if you look at the track record of both the funds, the Momentum, Max Momentum and the Prime Blue Chip, we've been running these funds for now almost 4 years, over 4 years. Over the last 4.5 years, if you look at the track record of these funds and you compare with, let's say, all the mutual funds in India, in the flexi cap and the large cap and the multi cap category, both these funds beat all mutual funds in terms of performance over any time horizon you take, 1 year, 2 year, 3 year, 5 year, which effectively means we're trying to bring products to the customers which probably are the best, we think are amongst the best, and we have a demonstrated track record for that. So our endeavor is meaning over the last 4 years, these funds have been able to do a 8 to 10% annualized alpha over and above the index, which probably the highest that
in the percentile.
In percentile in terms of, actually it places our funds at number one. If this fund were placed on a mutual fund platform, this would have been the best performing mutual fund in India.
Okay.
So I think that is what we're trying to, and that's an outcome of our investing philosophy, process, and discipline that we practice in that sense. Coming to, in terms of outlook for markets, I know it's been a challenging time, especially the last 6 months, given the world has, gone through so much of volatility and given the uncertainty that we're living in. And we have a new round of uncertainty that with the issues we have with India specific. I still firmly believe, one, as an economy, we are extremely resilient economy. India is one of those few economies which can withstand all of this, despite both globally as well, and we can deal with our neighbor issues pretty firmly. And India is amongst one of those very few economies which can withstand those kind of economic shocks. So India's growth is pretty resilient. Last year, FY25, India grew, our aggregate GDP growth was about 6.5%. Despite some negative rub-off effect because of tariffs, India will still do a 6.5% growth this year, my base case is, and probably some point of time, probably in the next probably 18 to 24 months, India's growth will start reaccelerating as we benefit out of shifting of manufacturing supply chains from China to India. Context of all of this, I've maintained that view all through the last 6 months of volatility in equity markets, that the overall bull market in India is very much intact. So we are very much in a bull market. This bull market started in 2020, if everyone would recall, on 27th March 20 to be precise. The first day of lockdown during COVID was the bottom of equity market. And since then, we've been in this bull market. So I firmly believe that we are very much in a bull market. And the simple idea with a bull market is on a full year basis, markets will deliver positive returns. And if that is the construct, then also what I'm saying is any fall in the market is a correction in a bull market and not a change in trend. So the correction that we have had in the markets from the peak in the index we had in September 24 until now and until mid-February or late February is more a correction in the larger trend of bull market. The larger trend of rising markets and making new highs every year, I still think is very much in place. Given that context, I still I'm a firm believer, or I firmly believe that by the end of this calendar year, we'll once again make a new lifetime high on Indian indices.
Wow.
So I think that's in store for us because underlying growth in India is pretty resilient, and more importantly, we had some sort of a cyclical slowdown in the economy last year, but I think growth coming back probably post monsoon in the second half of the year. And in that context, I still think that if you look at the from a returns perspective, from a slightly more medium-term perspective, 2 to 3 years that we're talking about, if you look at last 3 years, the Nifty index has done about 12% CAGR returns, which is pretty healthy in the context of the fact that over the last 5 years, meaning the index has gone 3x from the bottom, from the point where we started a bull market in March 20, the index was at 7,500 on the Nifty. And we have gone 3x and we're still compounding at 12% is not a bad outcome. It's a phenomenal outcome after such strong gains in the last 5 years. I still think that we can sustain these kind of returns over the next 3 years, where the Nifty index can do comfortably a 12% kind of a CAGR over the next 3 years. And in that context, active managers like us, alpha managers like us who want to generate returns over and above the index, in the last 4 years or 5 years that we've run the products that we're launching both on the momentum and on the blue chip, we've been able to do annualized 8 to 10% alpha over and above the index. So our endeavor will be to generate meaningful or healthy alpha over and above the index in that sense. And as I said, meaning there's so many of there's so much happening in the Indian economy. There's so many of these companies which are doing so much innovative or creative stuff and which can deliver outlier growth. From our perspective, our portfolio is about 25-30 companies. So as long as we can find those 25-30 companies out of the 2,500 companies, we should be fine. We'll be fine. We don't have to bother about the rest of the world when it comes to investing. We just want to make sure that we get those 25-30 companies. And I can assure you that there are more than that number of companies that are available which will deliver healthy returns. So our job is to, amongst those companies, just create a portfolio of 25-30 companies. And because our portfolio is strongly quality biased, I want to reiterate in these times of uncertainty, what really works out and stands out for our portfolios in times of extreme turbulence is these portfolios have lower drawdowns because our portfolios are low risk, and which is very important. So what investors usually experience is the drawdowns that they have or the markdowns they have with our portfolios are significantly lower than the markdowns they've had with any other portfolio, whether it's mutual fund or any other fund, or their own personal stock portfolio. And that's an outcome because as investors, we actively drive that outcome. That we want high returns, but we want those high returns while investing into high quality and low risk companies. And I think that's a very important pillar of our framework, which clients have really appreciated over the last 5-7 years.
So you're bordering on the lines of Warren Buffett's philosophies of safety, good, stable returns over a period of time. And buying good quality businesses. So.
He's god of investing, so all of us learn from him. But yes, meaning the first principle of investing, as he says, never lose money, and the second principle is don't forget the first principle. So I think that's essential. You want to make money, but first thing you want to do is you want to make sure that you don't lose money, and then you want to make money. And that's very important, in long-term investing, because when we are investing in, meaning, I want to say this, maybe I can take this opportunity. This whole process of wealth creation is a journey. It's a long-term journey. It's a given that in this journey, we will face uncertainties. We'll face events which are unknown to us. And our portfolio should be resilient enough to deal with those uncertainties at any point of time. Because these uncertainties will happen overnight.
Absolutely. Absolutely.
You know, so at all points of time, you have to have a portfolio which is resilient enough to deal with any sort of uncertainties. And which is why I say that we want to invest. I tell to my team, I tell to myself all the time that we want bulletproof companies in our portfolios. That's the first thing. And then we think about growth and everything else. Because the first thing we want to do is we want to preserve our wealth, we want to protect our downside.
Yeah. So I think one more question is, I think a lot depends on how do you forecast or see visibility in which sectors are emerging or which companies could be the next big multi-bagger or multi-winners. And in the portfolio construct, if you could throw light on one sector, I think in the last 6 months, banking has been, and as we were speaking about 2 months ago, you were extremely bullish on HDFC Bank. And you told me at 1600 it's a blind buy. So is there something new that you have to stock on this if you have to take the liberty of asking a specific sector or stock?
So one, clearly from a sector perspective, our portfolios are are overweight or have significant allocation to entire financial services. I think we are at a point where I think over the next 3 years, financial services will do well, exceedingly do well. Within banking, banks will do well because Indian banks are extremely resilient, and we see with rate cut cycle coming, stepping in, we see acceleration in loan growth, and that should drive growth for banks as a sector. But apart from that, I am also equally positive on the wider financial services sector. So we have exposure to asset management companies or the entire capital markets ecosystem, because I still think that given the high savings economy that we are, exposure to capital markets or flow of savings to capital markets is still very negligible in India or very small, and all of us are part of that ecosystem. And we clearly see that as a very big mega trend playing out in India over the next 20 years. So we like companies which are part of the capital market ecosystem. We own some of them in our portfolios, including likes of HDFC, AMC, and some other asset management companies or securities companies in that sense. So one, we like financial services as a whole. That's pretty. I'm a big believer and big bull over the next 5, 7, 10 years into internet. I think with evolution of AI, internet is becoming very central. If you look at India's entire internet economy, it's about currently about $250 billion, $225 billion. That includes everything, right from let's say Amazon to Flipkart to whatever fintech companies we have and all of that.
Absolutely.
My view is in the next 7 to 8 years, India's internet economy or digital economy, as we call it, will become $1 trillion.
Oh.
My firm belief in the next 10 to 15 years, some of the leading companies of India, amongst the top 50 companies of India, will be internet companies. We already have one already in place. Zomato is a company which is 10 years old. This is a company which is the fastest entry into indices in its lifetime. That a company within 10 years could make it to the top 50 companies in India. This will be the fastest growing company. The thing about internet is it's a game which is one, disruptive, because these businesses tend to disrupt a lot of established traditional businesses. And secondly, these businesses tend to have exponential growth curve. Because of digital adaptability, the growth curve on these businesses is exponential. And more importantly, they can have that exponential growth curve on they have a very long arc of growth, unlike traditional businesses, where you have to put, let's just think about our business, meaning banking or let's say broking, where you have to put physical branches versus digitally. All of that can be achieved much faster.
And a much larger scale.
On a much larger scale.
And more efficiently.
More efficiently. So these businesses can have a very long arc of high growth for a very long period of time. And that can be extremely rewarding as an investor if you can pick the business right. The challenge, I just want to caution, is it's a business or industry where winner takes it all. So within that also, within various segments of the internet economy, for every one company or two companies that succeeds, there will be 10 who will fail. So your stock selection has to be very correct.
Very specific.
We had 5,000, I started my career as an IT analyst in 95. We had 5,000 OT companies in India. But today in the listed universe, we have 40 companies out of that. So Infosys emerged as, or TCS emerged as one of those 5,000, or HCL Tech emerged as one of those 5,000. but there were 4,000 companies which are not around today. Yeah. So these businesses also, because of this high growth and technology is ever changing, they also have a high risk of failure. But the winners in this industry will create the highest amount of wealth, and probably the fastest wealth creation for investors will happen in internet sector.
Actually, very right, Pankaj. I think the most important aspect is to select something which is going to sustain, as you said, and going to be able to maintain the scalability and be resilient enough to absorb the short-term shocks, which is definitely inevitable in any business environment or any economic environment. So it can be related to business or it can be completely unrelated as to what we are facing today, geopolitically also when you look at it. So I think with that perspective, then we have two very strong fundamentals out here, which is the prime blue chip and the momentum max. So one focuses, I guess, on with a complete long-term view, where the people are more patient, where the investor is more patient with his investment and is not too much worried about making calls on a more frequent basis. And I think the momentum max is somebody who takes care of people who are little more excited on short-term basis as well, and which takes care of that aspect. But overall, I think the process out here is we are looking at something which is sustainable growth in that business activity and resilient enough to manage the shocks. And I guess third, but not the least, is they are efficient in running what they are running.
Absolutely. Either of the portfolios, the investors are buying into companies which are the best companies in India. And I can say with confidence, the best companies in India are the best companies globally, because talent in India or management capabilities in India are at par with the best in the world. So you're effectively buying some of the best companies that exist in this world in your portfolio, in either of the portfolios, because our filtering process for companies to get into our portfolio is extremely high. The bar is extremely high for these companies. To invest into a lot of these great companies, we reject a lot of good companies.
In the process
In the process. A lot of good companies do get rejected.
Right, true.
So undoubtedly, I can say that with confidence, that investors can put their money in the portfolio companies with high degree of confidence. And these are some of the best and the most, as Anshul, you rightly said, the most resilient business that you can be investing into India, yet being high growth. Yes. So you want a right combination of high growth and yet being low risk, high resilient. And I think this is what exactly these portfolios are designed to do.
Thank you so much, Pankaj.
Thank you so much. I think Sydney, I think both the strategies or the products are live on the portal.
Yes, absolutely. So can I have the volume of my TV?
Yeah.
Check. All right. Yes. Wow, there was some invaluable insights from Mr. Pankaj, Anshul sir, and Dheeraj sir. Yes, like Dheeraj sir mentioned, both the baskets are live on our platform. Please go ahead and check them out, and you can talk to your customers about them. And just to summarize these things, what we got out from whatever was said is the outlook of the market, how lucrative India is, and how great we are as an investment avenue for the world, and the way forward and the most lucrative sectors that Mr. Pankaj mentioned. I think I'm going to go and invest myself. I think with that we end this session. Thank you so much, Mr. Pankaj, for coming all the way here and sharing a few words of wisdom with us. Thank you so much.
Thank you.
Thank you.
Investment in securities markets are subject to market risks. Read all related documents carefully before investing.